What's up, Big Nation?
I think it's time to blow this thing. Get everybody's stuff together. Okay, 3, 2, 1, let's go.
You're an original, aren't you?
Cowboy.
I think it's time to blow this thing. Get everybody's stuff together. Okay, 3, 2, 1, let's go.
What's up, Abe Nation? Boss Blunts here, Marcel Klinovich. We're gonna do a little bit of a speed run today, but before we do, I gotta get my stuff ready. Gotta get myself in order here. The DD's all in order. I just can't do a whole lot. Well, I don't want to do a whole lot without this. Some delicious Paradise Punch right there. Check that out. Is that beautiful or what? Fucking love that. It's about 2 ounces. Very fucking dense. What's up, Abe Nation? Thanks for coming out to visit. Like I said, we're gonna get started probably about 3 minutes. It's about how long it takes me to roll a blunt. What's good, fam? Foot, Giga, Moises, C-Mac, Fabian, Susan. Hello, everybody. CBJ. What's up, Alex? Illinois, baby. Chicago area.
You're an
Not in
original,
Chicago
aren't
because
you?
it's too fucking ghetto and just expensive and sucks. But outside Chicago. What's up, Tap? Roach? How's everybody? Good to see you. Vault, Rennie, thanks so much for coming out, guys and girls. We're going to do speedrunner now because it's going to be completely different from the one I did earlier. But the one I did earlier was actually removed for copyright infringement, so whoops. You got to start with a fresh one. What's up, Rancher? Tom? Aaron? Hi, everybody. Hi, Tom. Tan? Jonathan? Yeah, the OGs. Foot Kilman. Good old Joylet the toilet. I know what you mean. Nothing wrong with it. Nothing wrong with it at all. Just not somewhere for me. But still, it's a decent area compared to Chicago. That's for damn sure.
Okay,
3, 2, 1, let's go. Mind your ears. Let's not blow them out. What's up, Uncle Savage, Alex, Abe, Amber? Hi, everybody. I've had a lot of people asking. This is a remix that I made of Tank by Seatbelts. The Seatbelts.
Okay, 3, 2, 1, let's go.
Just gonna let this little video play here while we're at it anyway, since I'm just rolling up. And the Dow Jones fell 600 points. The Dow. And we saw quite a few crazy things happen with the Dow, the SPY, NASDAQ, and especially the Hong Kong markets. Well, Evergrande itself, the Chinese markets were closed today. Thanks, CBJ. Appreciate it. If you guys could drop a like for the algorithm, that would be really appreciated. Manifest Density says, got my first 10x today. Made up all my learning curve losses back and then some. Love hearing that. I love hearing when you guys and girls are succeeding. That's fucking beautiful. That's why we're here. Even on a day where the market's red, you can still make a shitload of money, you know? And especially when the red means nothing for AMC and GameStop, in my opinion.
I think it's time to blow this thing. Get it
What's up,
rolling.
T1? It's good to see you too.
Okay.
Rancher, everybody. Thanks, Kurt. Appreciate it. Thanks, Tapped In Mindset. Everybody, Jason, Brady. I love it. Thanks for the support. Oh, look at that. 33.8. 44.37. I think it ended up right around 44.40 for the day. But I feel that tomorrow we could retest the 44.20 mark for the S&P 500. There's a less than 50% chance that that ceiling is raised by October 15th, according to whoever the Dan Clifton securities company is. That what does that say? Water? No, it says Strategic Securities. For a second, I thought it said Watergate. I guess that video of Citadel moving out on a Friday night and nearly midnight from Chicago is got me thinking Watergate. But again, cheers everybody. Smoke them if you got them. Drink them if you got them. Tonight, a little bit of Knob Creek in the house. Yeah, you can see I almost polished the bottle already.
You're an original, aren't you?
Cowboy.
That one took a long time because I was talking a lot. Sorry. I'm having fun talking to all you guys. What's up, Rancher? Pure Hustle Trading. I love it. Ape Nation in the house. NASDAQ and S&P on pace for the worst months of the year. S&P was down 1.7%. Woo. What's up, Revel? Hi, Amber. Hi, Nope. Dangerous. It's good to see you all. What's up, Future Whale? And you're damn right you're a future whale. Especially if you're invested properly. The S&P 500 on Monday notched its worst session since May. Cheers, man. Shit. I told you guys it's coming. I told you September was going to be the date. Somebody was talking shit saying that, hey, I thought you said that the market was going to crash by September 20th. It did. Evergrande's bonds were due today. Their fucking stock tanked. The Chinese market's in fucking turmoil, as well as many others I'm about to show you guys. Steele, if you don't smoke due to your job, I respect the hell out of you. You should not smoke unless you are able to and don't have to pass a drug test for work. So much respect, sir. I'll have a drink. Cheers. You know, whatever. Drink of water, whatever, man. It doesn't matter. All that matters is we get to hang out and learn together. You don't have to imbibe. You don't have to smoke. There's no peer pressure here. You don't have to buy or sell anything either. You do whatever you want because it's your money, it's your life, and you take care of yourself. Chris says, damn, boss, I'm a school teacher. You got school tomorrow. I need to go to bed and you had to go live. Looks like I'm going to be up for a while. What's up, Ronnie? C-Mac, why bother? Giga, I understand what you mean there, why bother. It all depends on what job you're doing, right? And Billy Illy, Amber, and for those that can't read the chat, he was just mentioning about imbibing or smoking. Hey, Edgar, Kyle, Emilios, it's good to see you all. Nah, no bombs, thank you. I got places to be tomorrow. Oh yeah, we're about to get into here. 90s kids say what? Good morning, Myers. Hi, everybody. Edgar. Good morning. Good evening. All right, let's call this one here. Yes, sir. No, sir. All right, let's get going. We're going to have a little speed round here. Right? You guys got to see oh, you can't see all these fancy tabs? No, check this out. Look at how many tabs we got ready to fucking rock and roll through right here. Excuse me. What's up, Paul? Good to see you, brother. Hi, Amanda. Hi, Elmo. Alex, Giga. Thanks a lot, guys. All right. Watch this nonsense. Oh, man. I'm just going to restart that video because I love that fucking song. I don't care if you guys get sick of me or Cowboy Bebop. What's up, Jesse? Thank you guys, everybody. Please drop a like for the YouTube algorithm. It's not for my ego, I promise. I don't really care about the likes, but it does share it with other people. And if you leave a like or a comment or both. Strategists said the renewed sell-off in U.S. markets on Monday is in part to a partisan gridlock. Partisan, it means both fucking sides are not agreeing here. You know, where you got Nancy Pelosi said on Monday that the House will pass a government funding bill and a debt ceiling suspension. Yeah, freaking right. I'll believe it when I see it. I'll believe it when I see it. The bigger hurdle is likely in the Senate, where lawmakers will need to muster 60 votes to pass such a bill that is not tied to separate reconciliation legislation. And if the Democrats want 60 votes, they need all but 3. So every single Dem except for 3 need to fucking vote on that. That's insane. Great, babes. Good to see you. Thanks for coming out, brother. Hang on one second here. Who do we got in the house? Much love, everybody. Truth. Let's go to truth. All right, we're going to move on here to the next portion here. But let's just say the Dow Jones was down, over 600 points at one point, and it recovered a little bit as well as the SPY. We got a long way to go. The U.S. government could default for the first time. The Treasury Department does not have a precise drop dead date right now. But I will tell you that those motherfuckers only have $315 billion left in the bank. The United States government spends $500 billion a month. $502 billion a month, to be more accurate. What's this? Oh, yeah, the 2021 Congressional calendar. Finally, we've been talking about this for like 8 weeks now, and it's, 7 weeks, because that's how long Congress was on vacation. Pretty fucking sweet, huh? And here we are, finally. Today was September 20th. September 21st is right here, and we're about to go at it for another fucking round of do absolutely nothing in goddamn Congress. And then October 1st, the government will be shut down as of 12:01 a.m. Eastern Time if they don't have an agreement on the debt ceiling, the $3.5 trillion spending package, and everything else that fucking goes along with it. So we could potentially be seeing some tough times ahead. Hey, thanks very much. I appreciate you subscribing. Feel free to subscribe if you like the information. Here's our good old friends at the Congressional Budget Office. Nonpartisan analysis for the U.S. Congress. And there's one thing I want you guys to notice is that they're actually really fucking bad at figuring out what they think is going to be, what the future looks like. Certain things they got right, Let me get my face out of the way here real quick. Watch this. For those of you that can't read, this was the 3-month Treasury bill rate. And back in 2011, it was projected that in 2021, the 3-month Treasury bill rate would be at 4.4%. What's it at really? 0.04. Let me scoot over for you. Oh, wow. So our projection was maybe 1/5. Well, I'm sorry. I just misspoke. About 1/15 of what it was actually supposed to be. So our actual is 1/15 or more or less than the 4.4% projected for 2021 back in 2011 when SIBO did this. They did predict that unemployment would be around 5.2%. As a matter of fact, it's around 5.3%. And in reality, it's much higher because a lot of independent contractors that don't qualify for unemployment or are not under unemployment anymore are not listed on this number. They're just broken and they have no way to receive any income whatsoever. And same thing happens for a lot of people on unemployment that were W-2 employees who have reached the maximum limitation of that cap. At the same time, you've got 10-year Treasury bill was supposed to be at, the 10-year Treasury note rate was supposed to be at 5.4%, and we are at a measly 1.37%. That's like 1/6 of the actual fucking estimate. That's disgusting. So this is how bad they fucking are at forecasting this. And just so you guys know, today it's 2021 now, right? Here's the most recent report for 2021, and they give you projections of what we're going to look at in the future. Let's just say it's not looking very good for America. Somebody mentioned YB Normal said, I heard that they were going to print $1 trillion coin to deposit to the Fed. I believe they might just do that. I believe the Federal Reserve may just print a $1 trillion coin. Maybe run it through American crypto blockchain for the first time in history. Who knows? Because we're at 2021, and they're saying that, obviously individual income taxes, they're projecting are going to increase quite significantly. They have a lot of projections that they make, and the majority of them are always understated in their favor. So in actuality, they are also expecting the total deficit to come down. Like, are you fucking kidding me? They expect to reduce the total deficit? Yeah, that's a joke. That's a joke. But at the same time, maybe I'm just reading the numbers wrong, because over here you can see the debt by the public. Oh, I'm sorry. The deficit is decreasing, is increasing by a negative number signified up here in this field. In this case, it is $23 trillion held by the public, which is currently at $28 trillion total. And next year, they project it to be at $24.4 trillion. Again, they've been pretty wrong in the past, Would it be the first time? See what I'm saying? Did those numbers, does 0.04 look anything like 4.4%? Absolutely fucking not. Absolutely fucking not. This is the S&P 500 Shiller CAPE ratio. For those that are unaware, the S&P Shiller 500 CAPE ratio is known as the CAPE ratio as well, CAPE, which is cyclically adjusted price earnings ratio. This is the S&P 500's current price divided by the 10-year moving average of the earnings, but it is adjusted to take into account for inflation. This metric was invented by American economist and Nobel Prize laureate Robert Shiller, and it is a fantastic way to evaluate indexes such as the S&P 500. And you may not be able to tell from here, but the higher this number is, the worse it is for our economy. The higher this number, it means this high number means that our economy has a better likelihood of crashing because it is oversold and overbought. Both at the same time, because it's overvalued. Okay? S&P 500 Shiller CAPE ratio is at a current level of 38.34, up from 38.09 last month, and up from 30.84 1 year ago. So it's increased by almost a third in 1 year because the federal government printed so much fucking money with their federal, money printer here, that when you combine that with supply chain issues that we're currently seeing and COVID deaths worldwide, it creates hyperinflation. And this is a change of over 0.5% from last month and 24.33% from 1 year ago. That is absolutely massive. And in case you're wondering just how massive that is, here's an example of what the CAPE, aka the Shiller PE ratio, looked like back in 1929 on Black Tuesday. It was at a 30. And the only time it's ever been higher than this was back in 1999 and 2000s, right during the dot-com bubble burst. Woo! Look at that, 37.64. It's down ever so slightly. It's down 1.7% on Monday for whatever reason. Maybe because they realized the China economy is crashing too. I have no fucking idea why it would be down on such a volatile day. But that's what it is. and it's still the second highest it's ever been. Maybe it was the first day of a correction. Maybe it was the first day of it coming down after Black Tuesday, starting to spike downwards instead of the upwards trajectory we've seen for the last 93 years. It's about to be open season on the stock market, says the truth. What's up, Steven? Hi, Milos. Margaret. Hi, everybody. Thanks for coming out. All right. Now, that being said, let's close that out. FX Hedge, Fin Watchdog, China Evergrande chairman, confident company will walk out of darkest moment and will fulfill responsibilities. He just put liar. Yeah, probably. That China Evergrande chairman doesn't seem to know shit. At the same time, Bloomberg posted not long ago that Evergrande is likely to default without direct support, according to the Standard & Poor's. According to Bloomberg, China Evergrande Group is unlikely to receive direct government support and is on the brink of defaulting. What's up, Frosty, Julian, Danny, George? Hi, everybody. The distressed developers' troubles could further hit investor confidence in China, and affect confidence in their China's property sector and junk-rated credit markets more broadly, according to the S&P report dated September 20th, 2021. It said, "We believe Beijing would only be compelled to step in if there is a far-reaching contagion causing multiple major developers to fail and posing systemic risks to the economy. Evergrande failing alone would unlikely result in such a scenario." At the same time, companies like HSBC, Prudential, and BlackRock are very large holders of Evergrande stock and bonds. Per a Bloomberg terminal that I showed you on video yesterday. You can go take a look at that from yesterday's video. That was from September 19th, 2021. And you can actually see the exact numbers from the Bloomberg terminals for both Evergrandes, because there's two of them on there. Contagion worries fueled a global sell-off, period. There's sagas coming ahead, and I believe they'll be done, in my opinion, by September 23rd. Evergrande will be completely bankrupt. According to investing.com, posted late night on September 20th, but moments ago, Asia Pacific stocks were down on Monday morning. Investors in the region continued to sell off shares as concern about Evergrande Group debt situation continues. They're on the Hong Kong Exchange. You can find them by typing 3333 in your brokerage search tab. Hi, East Fork, Joey, Bell Creek, Elmo, Trucker, Mugen, Marathon. Thank you all so much for your support. Please drop a like, subscribe if you like the content. Japan's Nikkei slid by almost 2%. Markets opened in Japan. Australia, it edged down ever so slightly, almost nothing. Hong Kong, the Hang Seng fell almost 1%. And the Korean and Chinese markets were closed on Tuesday. So on Monday and Tuesday in China, the Korean and Chinese markets will be closed for the Mid-Autumn Festival. They will reopen on Wednesday, which I would believe will be Tuesday night for us. Excuse me one second. You got it. I got excited there. Let's see. And that's where we're at. Yeah, we got another video popping up. Let's get that spam out of here. Ad blocker, do your thing. Come on. So yeah, that's what's up, everybody. All right. Across the Atlantic, Bank of England will hand down its policy decisions on Thursday. So we should be on the lookout for Thursday as well. Concerns about whether Evergroup will be able to pay $300 billion in liabilities. The company has $83 million in interest payment due March 2022 bond due on Thursday, and a second $47 million interest payment due on September 29th. The Chinese Communist Party has already told banks that they will not receive payment, period. That Evergrande will not be making bonds. I take that back. Quote unquote, Evergrande will not be making bond payments this month. End quote. They're bullshitting, saying that they're expecting a 5 to 10% range pullback. And we all know that that's not going to freaking happen. It's going to be a lot worse than that. Because, also posted about 1 minute later on investing.com, analysis investors grappling with Evergrande fallout Evergrande fallout weigh the risk of wider pain. One second. Here comes some sound.
For the latest deal.
Yeah, so polls are suggesting that really there could be multiple outcomes from this election. It's a very close race. From a popular vote point of view, the two main parties, the Liberals and the Conservatives, are neck and neck in the low 30s. But most pollsters believe that Justin Trudeau, based on these
this is going to be a big problem as well. People expect Trudeau
of a majority, which is really the
and I'm not sure what's going to happen. Nobody is. But this right here could shake markets globally.
Which means that he governed but needed the support of minor, smaller parties to pass
so you also have to be on the lookout for these
He called an
cats.
election last month, hoping to be able to parlay, probably the number one source of anxiety.
We've had the Nasdaq's worst day since March 18th, and it gained some of it back, quite a bit of it, but it was still in terrible shape. The Dow, look at that, the Dow was down almost 800 points again, and it's not the first time we've seen this. We saw this last month as well, but the banks ate it all right back up because they had money to burn from the federal, from all the artificial printing of money that's been occurring lately.
In fact, the proposal.
The S&P 500 traded at 21.6 times the forward earnings as of Friday, near its highest level since the late 1990s dot-com bubble, and prior to Monday, trading had rallied more than 18% year to date. Do you think that this has anything to do with this? The benchmark S&P 500 traded at 21.6 times forward earnings as of Friday, near its highest level since the late 1990s dot-com bubble, and prior to Monday, trading had rallied more than 18%. Again, this is only the second time in history that the current Shiller PE ratio for the S&P 500 has been this high. The only other time before was during the dot-com bubble, when we had a strong real estate market, when China wasn't falling apart, when banks weren't over-leveraged to the tune of $184 trillion. So Evergrande's woes have been playing out for several months. Its shares tumbled 10% on Monday as Chinese regulators warned that the $300 in liabilities could lead to widespread losses. For those of you that don't know, it doesn't say this on this article, but Evergrande only has about $18 billion in cash. They have no fucking cash. That's why they're paying people that they owe money to in apartments, because they have tons of apartments that are pretty much worthless, because a lot of people are going to have real estate and no food or money with which to buy food. And in order to make that money, they will have to sell these apartments, and they will likely all sell them at the same time for the most part. The MSCI Global was down 1.62%. The Russell 1000 and 2000 being down was what brought AMC and GameStop down today, along with aggressive shorting. That's why those stocks are down today, in my opinion. And again, so far the most negative action has been in the property sector, Chinese property sector, he said. I don't think this has had a major impact on most hedge funds so far. Okay, you see that? So far, most of the negative action has been in the Chinese property sector. He said, I don't think this has had a major impact on most hedge funds so far. In the U.S. equity options traders market, traders appeared more intent on taking profits from existing hedges than on buying up protection against a sharper sell-off, even as the VIX stood around the highest level. This sentence is literally stating that people, in my opinion, that people are more willing to invest in AMC and GameStop than on buying protection against the sharper sell-off, such as, maybe calls on the VIX or puts on the SPY. I don't fucking know. I'm just guessing. Or precious metals. Who knows what the hell they have in mind here. But literally that sentence means traders, quote unquote, traders appeared more intent on taking profits from existing hedges than on buying up protection against a sharper sell-off. So they're saying that people are willing to invest in their current things like AMC and GameStop, or taking profits from the market. So they think that people are just taking their money out. Well, I don't know about you, but I'm putting my money in AMC and GameStop, and everyone else is welcome to do whatever the hell they want based on their own research. He says, I don't think this is going to be the straw that breaks the global economy's back, and I think he's full of shit. You want to see why? Let's say goodbye to that article. This. Government shutdown, $3.5 trillion spending package, debt reconciliation bill. Mitch McConnell doing the same thing he did in 2013 and 2011. Overvaluation of our stock market. And guess who's hurting? The world's richest 500 lose $135 billion as Evergrande concerns spark market rout. Okay? Elon Musk led the declines as his world-leading net worth fell $7.2 billion fucking dollars. Jeff Bezos lost $5.6 billion. And guess what? I bet you they're not paper-handed bitches and didn't sell off their stock. I bet you Jeff Bezos still has his Amazon and Elon Musk still has his Tesla stock. So you decide what the fuck you're going to do in times like this. Somebody asked, isn't Evergrande a Chinese version of Lehman Brothers? You know what? Evergrande is a real estate and banking firm, the second largest in China, and they own 2% of all of China's real estate. Lehman Brothers had $500 billion, I think, in liabilities, and Evergrande has $300 billion plus, and only under $20 billion in cash on hand. That sucks. And Hill says pour some out for the 1% and their dead balance sheets. Nah, I'll save it and drink to them. Fuck it. They got enough money. They'll be all right. So this is already hitting worldwide. The other article that we just heard from investing.com is telling us this is going to be contained in China. The richest 500 people lost $135 billion. Two people alone, Elon Musk lost $7 billion, and Bezos lost over $5.5 billion. A cash crunch at Evergrande, China's most indebted developer, and a regulatory crackdown on the nation's real estate market stoked fears about possible financial contagion. The S&P 500 tumbled 1.7%, the most since May. Evergrande founder and chairman continued his precipitous drop in Bloomberg's wealth rankings as the company's shares fell to their lowest in a decade. I think they're worth about a quarter, 25 American cents. His fortune now stands at $7.3 billion, down from a peak of $42 billion. This guy. And by the way, in order to keep Evergrande in business this long, they had to convince their employees to work for free and to give them a loan by not paying them. And they even asked people for money. What's up, Truth Seeker? No Woodstock, brother. Property billionaires shed more than $6 billion combined. All right. This guy lost $29.4 billion and $2.3 billion in one day as well. So don't let anybody try to tell you the bullshit that this is contained in China. World shares sink from investing.com. This one's actually a Reuters article. Check this out. The Dow Jones down almost 2%. The S&P 1.7%. NASDAQ over 2%. The dollar index 0.1%. Sorry, 0.09%. And as we all know, world stocks saw a big sell-off on Monday. We saw that already, and shares in Evergrande scrambled, and they're down 2% for the day. They were down 19% at one point. So I don't know who bought them back. But, you know, the Dow fell 600 points. The S&P lost 75. The NASDAQ dropped 330. European stocks lost 1.67, and their mining stocks even slid. You know, $2.2 trillion of value wiped off the market of world equities from a record of 97 trillion hit on September. All right, 2.2 trillion. Does that ring a bell? Because Over on August 9th of 2011, during the debt ceiling crisis, the Dow Jones plunged 634 points as approximately $2.5 trillion was erased from global equities. And on Monday, we saw $2.2 trillion of value wiped out of the market like that. All that, and AMC held at 40. God damn, you're right. This is the Federal Reserve Report H8 released on September 17th, 2021, the most recent for commercial banks, for assets and liabilities of commercial banks in the United States. This is assets, this is liabilities, this is residual assets minus liabilities. This has gone up by about 20 billion from here to here, year over year. I'm sorry, excuse me, 80 billion. While in the meanwhile, this has gone up, their liabilities has gone from 18 trillion, 135 billion to 19.97 trillion. So their liabilities have increased by almost 2 trillion in order for their residuals to increase by 2 trillion. And that's assets less liabilities. That doesn't account for shorts marked as long. That doesn't account for naked shorts. That doesn't account for synthetic shares. And it doesn't account for unreported failure to delivers or failures to delivers that are being held overseas. There's a lot of liabilities that they are not reporting, and long positions that they are short positions that they are marking as long. Additionally, let's move on from that, because we've seen that before. I've showed you that in many videos, and that's a fact. You can find that at federalreserve.gov. It's report H8. This is the ICE Bank of America Euro High Yield Index. Wow, high yield, you say? How high of a yield is this bitch? 2.24. Excuse me. That number's so low it made me thirsty. TMI's baby mama, hi, nice to meet you, asks, what does this mean for our beloved AMC? It means they probably run inverse to the market. I'm happy as shit. This is what comes up when you pull up Euro junk bond yields, by the way. It's that comical. That's what they're known as, junk bonds. European junk bonds are at negative for the first time in history when you account for inflation at their 2.25% for this fucking, what is this, 10-year bond? Government bond yields for Australia are down to 0%. Okay? For a 2-year yield. So you invest your money in Australia for a 2-year bond, and you get 0%. And then when you account for inflation, that's actually negative. You're losing money. Japan. Their yield is down, down, down. Change over 6 months, down, down, down. And they're still doing pretty strong. Japan is doing very well compared to everybody else right now, it seems like. The 1 month they've increased ever so slightly. Good for them. Stay strong, Japan. But that's not good. A 5-year credit default swap. .719% maturity yield curve. Okay. Central bank rate is negative 0.1%. The 10-year government bond has a yield of 0.039. Less than 0.04. A 10-year, I take back everything I just fucking said. Because apparently I read that chart wrong. When you're wrong, you got to admit you were wrong. Japan has a 0.039% yield. That's terrible. The central bank rate is negative. This was updated September 21st, 2021 by worldgovernmentbonds.com. There's the URL. worldgovernmentbonds.com/country/Japan. 5-year credit default swap quote is 17.7 and implied probability of default is 0.3. Okay, sure, we'll see. German bond yields negative 0.73%. 5-year bond negative 0.64%. 10-year yield negative 0.32. 30-year yield 0.17 fucking percent. Does the global economy seem strong to you? America's bonds, 10-year Treasury. Boy, I've got some good news for you and some bad news for you. Cheers, because we're going to be fucking rich. God damn, we're going to be fucking rich. At least I am. I don't know about you guys. We'll see what happens. Well, more rich. Let's put it that way. The 10-year yield back in 2020, during when COVID was first announced, and also in August, it was down to less than half of a percent, 0.52 and 0.54 for March 9th, 2020. Today we're looking at 1.37. And for those of you that are unaware, back in 1981, the 10-year Treasury yield was 15.41%. In 1995, it was 7.91%. In 05, it was 4%. During the crash of 08, it was 2.25%. During the crash of 2020, it was 0.7. And right now, it's at 1.37. This is an exponential decrease in our yield bonds. And we are going to go the 10-year will maybe not go, well, when you account for inflation, it will be negative soon. The 1-year Treasury bill secondary market was at 0.11%, March 27th of 2020. It's currently at 0.07. Back in 1980, it was 14.9% yield for a 1-year T-bill. Now a 1-year T-bill is fucking trash. So that's negative when you account for inflation. American bonds are negative. What happened here? This one, the most negative, the one that was actually negative without accounting for inflation already. The 3-month Treasury bill, March 26th of 2020, for a couple of days was negative 0.05%, which is actually worse because you got to account for inflation, which is why we like the KPE ratio, which is why I like it. And today it is, well, I'm sorry. I should say as of the reporting of this on Fred, I believe on Friday and also on Monday, September 20th, 2021, it was at 0.04%. I think we're all pretty sure the Fed fucking lied about the CPI data because they changed the calculation on us time and time again. But that is what it is, right? We know they're going to be sneaky. And Hedgie's going to hedge. And you know what Hedgies can't do when Treasury bills go negative? Hedgies can't stay in business. Hedge funds collapse when American bonds and Chinese bonds and German bonds and Australian bonds and Japanese bonds and European bonds go negative. We're seeing nice crypto dumps. We're seeing crazy fluctuations in the stock market with a lot of changes. And it's going to take some time, but eventually margin calls will be going out. I'm sure they already have been going out, except we don't hear about those. And we won't hear about them until a margin default occurs. And that's when liquidations will start. So it could take a day, 2, 3, or more. But I have a feeling that we're already in that ball game. And we're going to start seeing some margin liquidations coming really fucking soon. So we're going to see seeing heavily shorted stocks start to change pricing very aggressively, I think, for the green, yeah. Japanese, yeah, I said it wrong, my bad. I was gonna say Japanese, excuse me. Somebody was making fun of me in chat. I'm like, yeah, it was funny. All right, let's wrap it up here. What do we got? The producer price indexes, consumer price indexes. All right. CPI for all urban consumers increased 0.3% in August, and it also went up another 0.5% in July. That's for a percentage increase of 5.3% over the last 12 months. Energy prices increased by 2% to 2.8% for gas, food, everything. The all items index rose 5.3%. All items, period. 5.3%. And as you can see here, energy was up 25%. Energy commodities, 42% almost. Gasoline, 42.7%. Fuel, 33%. Fuel was up 33%. Utility, gas was up 21.1%. Used cars and trucks were up 31.9%. Oh, good. Used cars went down ever so slightly. They were up at 47% at one point. Now it's only 31.9%. Oh, wow. That's fantastic, isn't it? And we're going to see some more changes for the month of September because this is for the month of August. I think the month of September was more aggressive in terms of inflation, which is leading to hyperinflation, than the month of August will be. It says the index for dairy declined in August 1%. I don't know. Dairy, whoop-de-doo. Everything else is up. Compensation costs for civilian workers increased 0.7%. Wage and salaries increased 0.9%, and benefit costs increased 0.4%. So when you increase 0.4 by plus 0.7, it's more than the wages and salaries. So the employers are paying a lot of money. They're paying 0.7 plus 0.4 plus 0.9 to get an employee now, more so than they were previously. Civilian workers can now cost almost 3% more. Wage and salaries increased 3.2%. Thankfully, that's a good thing. But it does also mean that things are costing more for companies, and companies are going to pass that along to the American consumer. So that's going to be fun stuff. The employment situation summary: non-farm payroll employment rose by 235,000, and unemployment declined by 0.2% to 5.2. Great. Monthly job has averaged 586,000. In August, notable job gains occurred in professional and business services, transportation and warehousing, private education, manufacturing, and other services. Absolutely. And a lot of people don't have the degrees to be in professional and business services. A lot of people don't want to drive a fucking truck to be in transportation. A lot of people don't want to sit in a warehouse to drive a forklift or lift boxes. A lot of people don't want to work as a teacher or don't have the college education. A lot of people don't want to work in manufacturing and other services. So there's a lot of issues, and people have a lot of choices now with the gig economy on how they want to live their life and how they choose to make money. And it's causing issues all around different supply chains and manufacturing. The producer price index for final demand increased almost 1%. All right, that's a pretty good increase. The final demand index rose 8.3% for 12 months. 8.3% for a year. That's pretty aggressive. Let's go to the next one. Real earnings summary. Real average hourly earnings for all employees increased 0.4%. That's not great either. U.S. import and export prices declined 0.3%, following increase of 0.4 and 1.1% in June. So that's a good thing. Not much change, though. All right, the United States Daily Treasury for Treasury balance, as I told you guys earlier, as of Friday, September 17th, the most recent available, is $315 billion. In the month of August and July, the United States Treasury spent around $502 billion per month. They started the month with $355 billion, and they have been holding off on paying everything they can. It's almost the end of the month, and a lot of bills are due. I showed you before, economic recovery programs, they took $75 billion out of in order to help sustain their budget. Public debt cash issues, which they pay $20 trillion, almost $21 trillion a year. They are still paying that aggressively because they have to, because if they don't, this is what means they will be defaulting on. Excuse me 1 second. Oh, shit. So America is in for some fun. We have the September 20th issues coming up. Man, I really look forward to AMC and GameStop. I think they're going to do very well when these other ones don't do well.